You think the market is poised to go higher in the short term? And then what about the longer term?
Yes, I do think short term, hi Taylor, the market's oversold. We're due for a bounce. And if Bank of America is right, the Fed will not be raising rates, that would be good, because I think we're focused on trade, but the Fed's announcement last week was more hawkish, and that's a much more concerning commentary than really about trade, in my opinion. Longer term, I'm not necessarily, look, the market is still up 7.5% from the February low. So it's not as if we've had a pretty good run here. Europe, emerging markets, they're a lot lower. I think there's bigger opportunities there. But I do think, just given the last few days, we're due for a bounce for sure.
What do you think, KC? And address what Andrew raised there about emerging markets, which, with rising rates and a rising dollar, have been suffering.
All right. Well, I would be very cautious as far as identifying an entry point into risk-based assets today for two primary reasons. One is our economy is in transition mode. We're going from a Goldilocks economy with low interest rates, low inflation expectations, stellar corporate earnings, to an economy that's full of big bad wolves, higher rates, changing inflation expectations, potential military conflicts, and a potential trade war. That second reason that I'm very, very cautious as far as entering risk-based assets today is trade. If the current administration is going to do a full court press on trade, it reminds me of the 20s and 30s, where you had incredibly punitive tariffs stifling trade. And remember, in the 20s, you had the 1929 stock market crash, and you had
so
a
are you in 100% cash?
depression.
What are you doing? It sounds to me like you're putting it in the mattress.
No, I'm suggesting as an entry point. Right now, we think that trade will get to a leveling off point where the president has a number in his mind, who knows what that is, but it will not stifle economic conditions. So we are still overweight risk-based assets, but if you're thinking about looking for an entry point into equities, I would be cautiously optimistic.
Andrew, you like technology, energy, financials. You say they're defensive. How are these sectors defensive? I mean, they're ones that are leveraged to a growing economy. So, I mean, I would think that you can't have it both ways, can you?
No, I think what I said was I like technology, financials, and I'm getting more interested in the defensives, namely some of the interest rate sensitive, because the short end of the curve has come up a lot, and the defensive, which are interest rate sensitive, utilities, REITs, consumer staples, they're down a lot. And historically, when the yield curve flattens to zero, this is when defensives actually start to work. And I think that's going to happen later this year. It's one of the reasons why I don't think the market's going to have a particularly strong year, but that's when those stocks start to kick in and start to outperform. So I think it's a great opportunity to start to nibble away at some of these groups that are down quite a bit.
KC, your reasoning kind of lost me there. I'm going to be perfectly honest with you. And my follow-up question is going to be, are you saying that you are comfortable holding risk assets but not putting more in right now, or what?
That is correct. That is absolutely correct. That right now our thesis is that cooler heads will prevail on trade. They'll get to a leveling off point, they'll come to some type of agreement, and it won't stifle economic growth. Therefore, the fundamentals of the economy remain intact, that you're going to have decent economic growth, decent corporate earnings, and I would remain long risk-based assets. But the question was, what about deploying new capital, looking for an entry point into the market? And that's where I would be cautious taking cash and just plowing it into the market at this time because of the trade risk.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.